Welcome back to Dimension Trader. This is JT. This channel is dedicated to help the trader like you to improve your trade in 7 days. So let's begin. Today we are going to do a little bit different. Instead of the analysis of the pairs, we are going to show you the different trading styles, which we have the swing trade, scalping trade, reversal trade, continuation trade, everything inside of one pair. Once you identify your advantage on the trading style, then you are halfway to the success on the trading journey. Okay, let's begin. So let's talk about the Australian dollar, for example. We are going to show you how this trade can help you to identify your trading style. If you are looking for bigger risk, like more than 50 or 100 pips, we will go in for the long-term trade as the day, weekly, or even monthly. At this point, we can see inside of the Australian dollar, we do have the setup at the previous point, which we can see right here. We got the bottom, trendline break, pricing coming back, and pricing coming back again, which is corresponding to the dimension 5. Okay, so this long-term trade gives us a very good rejection hammer for the long. Once we see this, combined with more trend line confirmation, this can be a good long trade for the entry right here, stop right below, which is costing about, let me see, for about 100 pips right here, 100 pips. And can give you very good risk and reward for 1-to-1 target or 1-to-2 target. This is for the long-term trading style, and it's give you hold for at least a week. Okay, this is long-term trading style, bigger risk. Now, just moving down to the 4-hour. 4-hour, we can see there is the top trendline break, resistance with inverse hammer. Okay, combined with the trend line that's forming right this area. So if the pricing reaching onto this area, we are expecting a short trade for enter along this area to target 1 and target 2, even down to target 3 area. With this 4-hour, this is half long-term, half swing, which is a midterm, give you around 5-4, 5-5, about 50 pips risk, and probably give you holding less than a week. So this is the midterm swing trade, as we can tell in 4-hour chart. Okay, so depends on your risk, we can identify how long do you want to hold your trade. Now back to hour. In the hour, we can see there is the bottom right here, trendline break, pulling back. This is the good long trade for around 42, 40, about 20 pips. And the pricing moving from target 1, target 2, all the way to target 5 within a week or so. So swing trade for price pulling back with a big hammer as a confirmation and travel along with the trend line up to the target 5, which also a trend line break resistance area. Okay, so you can see this weak trade give you around 20 pips risk all the way to target 5. So this is the short-term swing trade in hourly, as we can see. Okay, and now down to the 15-minute. This area is going to be a very interesting to see. First of all, we can tell this is the New York close, and around the 00 time, this is the London open. So at this point, we got a bottom trend line break with pulling back with order rejection combined with the trend line forming. If we enter right here, this is going to give you around 10 to 15 pips risk, and all the way to the next day's news push up price to the previous resistance target 5. This is half scalping, half swing trade. So London open, we see the setup, pricing moving up. Could be a very good strategy if you are looking for a very short pip risk. Okay, last, this is the 5-minute scalping trade. As we can tell, this trade happened in the New York close time, and pricing is moving up, pricing breaking up, pulling back. As we can see, this is the dimension 2. Okay, this area is dimension 2 right after the New York close, along with a trend line and moving all the way up to pricing target 4 for the risk of 5 pips. Scalping after New York close have to be very conservative because most of the time pricing will not make new high or new low. So if you scalping with this particular time frame for the section opening or section close, this is New York close, could be the very good scalping strategy without a lot of the momentum that will breaking down to your stop. So this is pretty much all style of the trading that I can putting out today, May 1st, 24 for Australian dollar. So as we are moving forward to become one of the successful trader, first of all, we need to find out what pip we can risk within our tolerance and how long can we hold this trade. We have a week trade, we have couple days trade, we have 1 hour trade, and we have 1 session trade. So we have to identify how much you can take a risk to take your action. As a dimension, this is just one of the pricing cycle from the top and bottom, which create between the resistance and support that can help you to identify where of the position you are at when you enter the trade. This is not a set of the strategy, but definitely this can give you a very good idea when you execute your trading plan. As we have the top and we have the bottom, when the price is moving between, this is the continuation. Once the pricing hit the resistance, price break the trend line and moving back to the support. So this is the dimension 1, dimension 2, dimension 3, dimension 4, and dimension 5. This is create a complete picture when you execute your trading plan. Are you a continuation trader or are you a reversal trader? So this is a very important idea for you to lay out your trading plan. Today we just went over the trading style, the pip risk. If you take one thing or two can help you to improve your trade, that will be awesome. Feel free to subscribe, share, comment below so we can help you to improve your trade better in the next time. Okay, that's pretty much about today's video. We'll come back again next time. Thank you.